And India remains a star performer. That's the word coming in from International Monetary Fund, projecting that India will contribute to about 16% of the total global growth. It is in line with what many people have been saying, analysts, agencies, and now IMF joining a long list of people appreciating India's growth story, Kartik.
Shweta, so, it's interesting to note how the lexical usage sort of, and that narrative has moved in the last 1 year from the same IMF calling India a bright spot in the world when it came to India's growth. The narrative has actually progressed to now becoming a shining star. Shining is something I've added, IMF has not, but yeah, from a bright spot, you've become a star performer. Not surprising if you look at it. I think India's macro fundamentals have been robust, and we've seen that at a time when the US economy was slowing down and there were talks about US going into recession. That narrative then got changed to US perhaps looking at a soft landing, and the debate is still on whether next year is going to be a soft landing or a hard crashier landing for the US. And at a time when China, which was thus far the sort of most talked about pre-COVID, the most talked about Asian economy, India has come out much stronger than both US and China. So IMF also looking at data and its own projections between last year and this year, revising a few times over. At one point, IMF was looking at India's growth rate to come in at about 6%. It revised that to 6.2%. And now it's saying 6.3%. So, overall, the IMF projection on India's growth has also been increasing, and this has been going higher in line of India's own set of macros doing well. So, we've seen a 7.6% or 7.8% growth rate in Q1. We've seen a 7.2% growth in Q2. So overall, India's sort of own projections of 6.5% annual growth have gone up to about 7%. So in line of this, I think IMF is now coming and realizing that yes, India is definitely not just the fastest growing major economy in the world, but also, contributing almost 16%, and 16% is a good, handsome double-digit contribution to global growth. So there is, of course, this growth being registered on the back of other economies slowing down, but can't take away from India a few things which IMF has also mentioned in its own report. The first and foremost, of course, being that India is a large, young and growing population. And this population is contributing to consumption in India. Second, of course, is the government's own focus on building infrastructure. Infrastructure and logistics both becoming very, very critical delivery tools for really driving this vision of India progressing and India becoming a star when it comes to India's own economy. Add to this, of course, there is room still for some sort of fiscal buffers, financial stability, price stability, because inflation we've seen in India has remained high, has remained sticky. And despite RBI's best efforts, we still haven't yet been able to come down to the 4% headline inflation rate, which the RBI really wants. So price stability in India is definitely going to be a factor.
I want to come to some of these factors one after the other, and a very important statement coming in from IMF at this point is that India rebounded when it comes to pandemic, and perhaps the rebound that India has seen was unlike any other Asian economy. For instance, China. China could not do away or wish away with the strict and very strict measures that it put into place. Hence, the rebound curve was rather slow and not as steep as that of India. Perhaps the measures that India has taken has helped India.
I mean, see, definitely India resisted that temptation of printing cash. And this is something that the US did, and the effects of that are there for all to see right now in the US. But India, while India did not print currency, India did engage in certain freebie schemes like free ration to 80 crore Indians, and that again has been extended for a period of 5 years. Even though COVID we thought was behind us, not anymore. It seems like there is another variant of COVID which is rearing its ugly head. But that notwithstanding, I think India restricted itself and resisted that temptation of printing currency and handing it over to those who needed to spend money. Rather, the government procured ration and distributed
and literally put the money where the mouth is.
And put the ration at least right to the mouth, rather than giving money to people to go and buy. And add to that, of course, India's own digital payments infrastructure, the entire digital infrastructure and financial inclusion, these stories have augured well for India's growth. So at one level, India has ensured that there has been consumption. If private consumption in at least tier 1, tier 2 cities, when you look at that data with respect to people purchasing cars and property prices which have been on the high, that is one end of the story. The other end of the story, when we're talking about lower middle income population or the below poverty line, there has been enough subsidy given by way of the government, getting them to at least buy 3 square meals a day or provide those 3 square meals a day. So all these have kept India's economy not just afloat during COVID, which it did, but also the K-shaped recovery that we spoke about, when from a decline in the second quarter of FY21, we saw like an immediate correction and we registered a growth in FY22. And that story has continued, and numbers coming in, the macro data coming in this financial year, FY24, is also registering better than expected growth. In fact, all analysts, all economists out there, nobody really being able to gauge or get a real sense of what growth numbers India will get.
Absolutely. So the growth numbers in India continue to surprise. Perhaps inflation again is something that IMF is taking note of. It says that country has moderated its headline inflation numbers. Employment has surpassed the pre-pandemic levels, and informal sector continues to formalize. So IMF taking note of some of the measures that government took, perhaps in the budget that has gone by.
I think this is one place, Shweta, where I would disagree with IMF, because I believe while employment numbers may have surpassed pre-pandemic levels, but unemployment rather continues to hover around the double-digit mark for India. So I think the last data that was released by CMIE about 2 weeks ago suggested that rural unemployment is actually just at the border of 10%, about 9.8% or so. And even urban unemployment has been fairly sticky and fairly high at 8%. So jobless growth is obviously a risk area for India, and the fact that India has not been able to create as many jobs, and those jobs that had been created in the formal sector have actually been lost. So if you look at the startups in New Delhi, Gurgaon, Mumbai, Bangalore especially, you've seen that startups have this year laid off, as many as 25, 28,000 odd people. I mean, those numbers are fairly wide-ranging. And even the IT sector, which in fact has higher employment targets year on year, this year had to cut jobs, and not just cut jobs. In fact, their sort of projections to employ more people next year are also a little tepid. And look at this in the context of AI, generative AI, which can do the basic jobs of coding and the rudimentary sort of, entry-level jobs, will also mean that perhaps jobs in the organized formal sector will be harder to come by. So will India be actually able to tide over this sort of, growth spurt that we are seeing on the basis of formal employment not picking up? That would be one challenge area. But IMF is also hoping that political stability is something that will enable India to ride over all these challenges in the coming election year.
And in fact, IMF also taking note of the general elections in 2024, suggesting that the government has so far aligned with IMF's own, suggestions when it comes to continuity in policy, and IMF in fact rolling the drums when it comes to India's growth story there.